You think trading is about numbers, charts, and timing? Think again. The real battle is happening between your ears. It's your mind that wins or loses trades, long before you hit buy or sell. What if I told you that mastering your psychology is more powerful than mastering the market itself? In this video, we're diving deep into trading psychology by legendary trader Richard Dennis. This isn't just another book. It's a mental blueprint for becoming a disciplined, fearless, and profitable trader. If you've ever struggled with fear, greed, revenge trading, or overconfidence, this is the book and the video you need. You're watching Book Loom, where powerful ideas from world-class books come to life in just 20 minutes. Hit that subscribe button, because this journey could change how you trade forever. Chapter 1. The Inner Game of Trading. What if I told you that the biggest threat to your trading account is you? That's exactly where Richard Dennis starts this game-changing book. Not with market strategies or technical setups, but with the mental battlefield inside your head. Most beginner traders obsess over indicators, entry points, and fancy software. But Dennis pulls back the curtain and says, none of that matters if you can't control your own mind. Trading isn't a math problem, it's a mind game. In this first chapter, Dennis shares a bold truth. 80% of trading success comes from mastering your own psychology. Only 20% is about the strategy, the system, or the analysis. Let that sink in for a second. You could have the best trading system in the world, but if you panic when a trade goes red or get greedy when one starts going green, you'll still lose money. Dennis calls this the inner game, and it's not optional. It's the foundation. Self-awareness, the ultimate trading tool. Dennis dives deep into a powerful concept. Self-awareness is more valuable than any chart pattern. He asks traders to watch themselves like a third-person observer. What thoughts pop up before you click buy? What emotions hit you after a loss? Do you justify breaking your plan with excuses? This kind of self-inquiry isn't just nice to have. According to Dennis, it's the only way to separate your emotions from your decisions. The real enemies: fear, hope, and regret. Dennis introduces the three emotional saboteurs. 1. Fear, that makes you freeze or close early. 2. Hope, that makes you ignore reality, holding on to losers. 3. Regret, that keeps you stuck in the past, doubting your every move. He says these emotions are not evil, they're natural. But if they go unchecked, they will dominate your trading behavior. Why traders repeat mistakes. This part is eye-opening. Richard Dennis explains why so many traders keep making the same mistake over and over, despite knowing better. It's not lack of knowledge, it's lack of mental discipline. Most people trade with the unconscious goal of feeling good, not making profits. That's why they chase revenge trades, ignore stop losses, or break their own rules. The mind seeks emotional relief, even if it means financial damage. This chapter is like a mirror. It forces you to look inward. The brain's trick: instant gratification versus long-term thinking. Here's where Dennis connects trading psychology to human biology. Our brains are wired for instant gratification, but trading rewards delayed gratification. Winning traders train their minds to think in probabilities, not outcomes. They stop asking, did this trade win? And start asking, was this a good decision based on my system? That shift changes everything. Key lessons from Chapter 1. Your emotions drive more trades than your strategy does. Self-awareness is your first step toward consistency. Fear, hope, and regret are natural, but they must be managed. Discipline means choosing what's right over what feels good. Thinking in probabilities is the mindset of a pro. If emotions are so powerful in trading, then how do you actually control them when real money is on the line? In the next chapter, Richard Dennis shares the secret weapon that separates disciplined traders from emotional wrecks. Chapter 2. Discipline over emotion. Let me ask you something. Have you ever told yourself, "This time, I'll follow the plan," only to abandon it the moment the market moved against you? If yes, congratulations. You're human. In this chapter, Richard Dennis drills down into the heart of trading success: discipline. Not the kind of discipline that just means working hard, but the kind that keeps you calm when everything inside you is screaming to react emotionally. This is where most traders fail. Not because their systems are wrong, but because their emotions override them. Trading without discipline is gambling. Dennis starts by being brutally honest. If you don't have discipline, you're not trading, you're gambling. The market doesn't care about your feelings. It doesn't care if you're on a winning streak or a losing spiral. It just is. The only thing you can control is how you respond to it. Without discipline, every trade becomes a reaction instead of a decision, and that's dangerous. Why discipline feels unnatural but works every time. Here's something fascinating Dennis reveals. Discipline is unnatural. Our brains are wired to seek comfort, avoid pain, and react emotionally. Discipline, on the other hand, forces us to go against our instincts. That's why it's so rare and so valuable. He compares it to a muscle. At first, discipline is uncomfortable, but the more you practice it, the stronger it gets. The role of a trading plan. Dennis emphasizes this. Discipline only works if you have a plan worth following. He recommends having a written trading plan with clear entry and exit rules, defined risk per trade, stop-loss levels, position sizing rules, when not to trade. When the market moves fast, emotions take over, unless you have a plan to lean on. He says, when in doubt, follow the plan. Sounds simple, but it's hard when your money's on the line. What happens when you break discipline? Richard Dennis doesn't sugarcoat it. Every time you break discipline, you weaken your trading identity. You're not just losing money, you're damaging trust in yourself. Even small slip-ups compound over time. First, it's ignoring a stop-loss. Then, it's doubling down to recover. Before you know it, you're trapped in an emotional cycle. Lesson? Every disciplined decision reinforces the trader you want to become. The power of consistency over brilliance. Dennis says, a mediocre strategy followed with discipline will outperform a brilliant one followed emotionally. That's huge. You don't need to be the smartest trader on the block. You need to be the most consistent. It's not about perfect trades. It's about repeatable, rule-based decisions. Mindset shift. From outcome to process. Many traders obsess over individual wins and losses, but Dennis teaches us to focus on the process. He asks, did you follow your plan? Did you manage your risk? Did you stay calm? If yes, then it was a good trade, even if you lost money. Because long-term success comes from process, not results. Key takeaways from Chapter 2. Without discipline, you're gambling, not trading. Discipline is unnatural, but it can be trained. A clear plan turns chaos into structure. Breaking discipline is more damaging than a losing trade. Consistent process greater than emotional brilliance. But wait, if discipline is the foundation, then why do so many traders still try to predict the market like it's a puzzle to be solved? You will know in the next chapter. Chapter 3. The illusion of control. Let me ask you something. Have you ever stared at a chart, convinced you knew what would happen next, only to watch the market go in the opposite direction? Welcome to what Richard Dennis calls the illusion of control. In this chapter, Dennis pulls back the psychological curtain on one of the most dangerous traps in trading, the belief that we can predict or control the market. The market can't be tamed. Dennis makes it crystal clear. The market is bigger, faster, and more unpredictable than any trader. Yet many fall into the trap of thinking they've figured it out after a few wins. That's when danger creeps in. You start believing that your strategy is foolproof, that your intuition is elite, that you're finally in control. But here's the brutal truth. Control is an illusion, and acting on that illusion often leads to overconfidence, oversized positions, and massive losses. Dennis draws a sharp line between two mentalities. 1. The predictor, obsessed with being right. 2. The probabilist, focused on managing outcomes over time. Predictors tie their identity to being correct. If a trade fails, they feel like they failed. Probabilists know they can lose half their trades and still win big, because they control risk, not results. Real traders don't predict, they prepare. Why the illusion feels so real? Here's what's tricky. The brain loves patterns. It finds shapes in clouds, faces in trees, and false certainty in the markets. When a setup works once or twice, your brain locks in. You start believing you can outthink the market, that you have some edge no one else sees. Dennis warns, that's your ego talking. It wants to feel safe. It wants to feel smart, but it will betray you the moment the market shifts. Dennis gives us the ultimate mindset shift. You can't control the market, but you can control your behavior. This is the cornerstone of professional trading. The pros don't try to outsmart the market, they outdiscipline it. They focus on execution, not outcomes. They control position sizing, stop-loss levels, entry-exit consistency, emotional reactions, and most importantly, they accept the randomness of short-term results. Dennis compares traders to surfers. You can't control the wave, but if you're skilled and balanced, you can ride it. Letting go of control doesn't mean giving up. It means trusting your system over your feelings. It means embracing uncertainty and still taking action. That's true power. Key takeaways from Chapter 3. Believing you can control the market leads to disaster. Focus on probability, not prediction. Overconfidence is often disguised as certainty. Your edge comes from discipline, not foresight. The more you accept randomness, the more control you gain over yourself. If letting go of control is so important, then how do you manage emotions like fear and greed, especially when real money's at stake? You will know in the next chapter. Chapter 4. Fear and Greed, the Twin Killers. In this powerful chapter, Richard Dennis unveils the two silent assassins that kill more trading accounts than any chart, indicator, or crash ever could. Fear and greed. Fear, the thief of opportunity. Let's start with fear. Dennis explains that fear is a survival instinct. Great if you're being chased by a lion, but deadly in trading. Fear causes premature exits from good trades, hesitation to enter valid setups, emotional overreactions to volatility. Traders gripped by fear don't just lose money, they lose confidence. And once confidence is shaken, discipline collapses. Dennis warns, the fearful trader always sells low and buys high. Why? Because they react to pain, not to logic. Greed, the delusion of more. Now enter greed, the more deceptive killer. While fear makes you hesitate, greed makes you reckless. It tells you that rules are for average traders, that this time you're right, and the market will keep going. Signs of greed include ignoring profit targets, doubling down after wins, risking more to get rich quick. Dennis explains that greed isn't about money, it's about ego. It's the voice inside that says, you're special, you deserve more. But the market doesn't care what you think you deserve. The deadly cycle, fear, feeds greed, greed feeds fear. Here's where things get dangerous. Most traders don't realize that fear and greed feed each other. After a greedy win, fear of losing it all kicks in. After a fearful loss, greed pushes you to make it back fast. This emotional roller coaster leads to overtrading, revenge trading, abandoning your plan entirely. Dennis compares this to an addiction. It feels good in the moment, but always ends in regret. Emotional mastery equals trading mastery. So how do you fight these twin killers? Dennis offers a clear answer. Structure. You can't eliminate emotions, but you can outsmart them. Here's what he recommends. Predefined entries and exits. No in-the-moment decisions. Position sizing rules, so no single trade feels overwhelming. Daily review habits, to track emotional triggers. Stop trading after emotional spikes, wins or losses. He also emphasizes mindfulness, becoming aware of when fear or greed is creeping in before it takes control. Emotions are like waves. You can't stop them, but you can learn to surf them. Key takeaways from Chapter 4. Fear makes you exit early. Greed makes you stay too long. Both are rooted in ego and survival instincts. They are natural, but must be managed, not obeyed. The best traders follow structure, not emotion. Emotional awareness is the first step to freedom. If fear and greed are this powerful, how do some traders stay calm, confident, and consistent under pressure, no matter what the market throws at them? You will know in the next chapter. Chapter 5. Revenge trading and ego traps. You lose a trade. Frustration builds. Your heart pounds. Your brain screams, I have to get it back, now. So you jump into another trade. No setup, no plan, just raw emotion. Welcome to the dangerous world of revenge trading, a psychological trap that Richard Dennis calls a destroyer of discipline, capital, and confidence. This chapter exposes how ego-driven decisions can ruin even the most skilled traders, and what you can do to stop them. What is revenge trading? Revenge trading happens when you try to win back a loss immediately, without logic, without analysis, just emotion. It feels like justice, but it's actually sabotage. Dennis explains that after a loss, many traders feel personally attacked. They take the loss as a blow to their identity, not just their portfolio. And that's when they strike back, not with strategy, but with ego. The result? Overtrading, bigger risks, irrational decisions, and even deeper losses. The ego trap. I have to be right. At the heart of revenge trading is a fragile ego. Dennis explains the ego trap like this. You tie your self-worth to your trading performance. A loss makes you feel like a failure. So you chase wins to prove your value. But here's the hard truth. The market doesn't care about your ego, only your discipline. Trying to win back respect from the market is like yelling at a hurricane. It won't hear you, and you'll end up broken. The psychology behind the spiral. Why do smart traders fall into this trap? Dennis dives deep. Losses trigger emotional pain. Brain craves relief. Winning feels like a reward, so we chase it. But chasing leads to more reckless behavior. It's not logical, it's biological. Our brains want to restore balance fast. But trading isn't about speed, it's about control. How to break the cycle. So how do you avoid falling into revenge trading and ego traps? Here's what Richard Dennis recommends. Take a break after a loss. Step away. Breathe. Let the emotion cool. Set maximum daily loss limits. Once you hit it, walk away. No exceptions. Detach identity from outcomes. You are not your last trade. A loss doesn't define your skill. Journal emotional triggers. Track when and why you get emotional. Awareness is your defense. Trust your system, not your feelings. Your trading edge lives in your plan, not in emotional decisions. Dennis emphasizes, discipline isn't tested in winning streaks, it's tested in losing ones. Key takeaways from Chapter 5. Revenge trading is emotional, not strategic. Ego wants to be right. Discipline wants to be profitable. Losses hurt, but emotional trading makes them worse. Walk away, reset, and come back with clarity. The best traders lose with grace and win with humility. If ego and revenge can ruin a trader, then how do great traders bounce back from losses, rebuild confidence, and keep trading like pros, even after they've been knocked down? You will know in the next chapter. Chapter 6. The Power of a Trading System. Imagine walking into the market each day without fear. No second guessing, no emotional roller coaster, just clarity, structure, and confidence. This is what Richard Dennis calls the true power of a trading system. Not just a strategy, but a mental anchor that frees you from chaos and emotion. In this game, consistency beats brilliance, and your system is the blueprint that separates pros from gamblers. What is a trading system? A trading system isn't just a bunch of indicators slapped on a chart. According to Dennis, a real system includes clear entry rules, defined stop-loss and exit points, position sizing logic, risk management strategy, rules for when not to trade. It's a framework that removes emotion from decision-making and replaces it with data, logic, and discipline. If you follow your system with discipline, you've already won, regardless of any single trade's outcome. Why most traders avoid systems? Here's the twist. Most retail traders don't follow a system, and Dennis explains why. Because systems feel boring, because they take away the illusion of control, because they remove the fun and the thrill. But that's exactly why they work. Dennis writes, "The market rewards structure, not emotion. If you want excitement, go to Vegas." The magic of systematic thinking. A trading system does more than guide your trades. It reshapes your psychology. Here's how. It neutralizes fear and greed. Because every move is planned in advance, it reduces decision fatigue. No more guessing or overthinking in the heat of the moment. It builds confidence because you know your edge is statistical, not emotional. It makes losses manageable because they're expected, not personal. When you think in systems, you stop chasing wins. Instead, you execute a process and let probability do the work. Rules versus intuition. The Dennis approach. Some traders believe gut feeling is better than structure. Richard Dennis disagrees. He says gut instinct is often just emotion dressed up as wisdom. Systems are based on testing, history, and logic. Intuition, without data, is dangerous. But here's the key. Once you master your system, you can layer intuition on top, not the other way around. Building your own system. Dennis doesn't just preach systems, he gives guidance on how to build one. 1. Start with one proven setup. Trend following, breakouts, etc. 2. Define your risk. Never risk more than 1 to 2% per trade. 3. Backtest extensively. Don't trust theory, test it. 4. Track performance and tweak. Systems evolve, but slowly and with evidence. 5. Stick to it religiously, especially during drawdowns. Your system becomes your trading identity and your psychological safety net. Key takeaways from Chapter 6. A trading system is your edge, your discipline, and your defense. Emotionless execution leads to consistent performance. Gut instincts fail without data. Systems don't. Discipline to follow the system matters more than the system itself. If trading systems are so powerful, why do most traders abandon them the moment they hit a losing streak? You will know in the next chapter. Chapter 7. Confidence versus overconfidence. In trading, confidence builds millionaires. Overconfidence breaks them. One sharp decision can launch your career. One careless assumption can end it. In this chapter, Richard Dennis delivers a warning and a roadmap about two traits that look similar on the surface, but have opposite outcomes. Why confidence is essential. Confidence in trading isn't arrogance, it's trust in your process. According to Dennis, true confidence is built from repeated discipline, experience with both wins and losses, deep understanding of your system, emotional control under pressure. A confident trader trusts their system, especially when it's being tested. Confidence gives you the courage to pull the trigger, to stay in a winning trade, to walk away when your rules say so. It's earned, not assumed. How overconfidence creeps. In overconfidence, on the other hand, is a silent predator. It feels like strength, but it's just ego inflated by short-term success. Dennis explains how overconfidence builds. 1. You hit a few winning trades. 2. You start to believe you're better than the market. 3. You bend your rules. 4. You start risking more than you should. 5. You get blindsided by a loss you never saw coming. Overconfidence blinds you to risk. It convinces you that your gut is smarter than your plan, and that's where downfall begins. The psychology behind the trap. Here's the tricky part. Overconfidence feels exactly like confidence. It's hard to spot until it's too late. Dennis says it best. The market is designed to humble those who think they've conquered it. Traders riding a win streak often stop backtesting. They ignore risk. They assume their hot hand will continue. That's not confidence. That's a delusion. How to stay confident, not cocky. Richard Dennis offers a powerful framework to stay grounded. Track your emotional state after every trade. Are you feeling proud or invincible? Respect randomness. A few wins don't prove skill. A system proves skill. Use drawdowns as ego checks. If you can stay humble during wins and composed during losses, you're balanced. Set process goals, not profit goals. Focus on execution, not outcome. Review your wins like you review your losses. Ask, did I follow my system or did I get lucky? Confidence walks with discipline. Overconfidence sprints into disaster. Key takeaways from Chapter 7. Confidence equals trust in your edge. Overconfidence equals belief that you're untouchable. Wins can blind you more than losses. Even pros get overconfident. If they stop respecting the market, stay humble, stay structured, stay successful. If overconfidence can destroy even the best traders, what's the ultimate skill that keeps you from slipping, even when the market tests your limits? You will know in the next chapter. Chapter 8. Long-term thinking and patience. Want to know the biggest secret that separates wealthy traders from the ones who disappear? It's not just strategy. It's not just discipline. It's time. In this chapter, Richard Dennis reveals why long-term thinking and patience aren't just personality traits. They are core trading skills. Without them, even a winning system will collapse. The myth of instant success. In today's fast-paced world, traders want quick wins. They want every trade to be the one. They want growth like a rocket, not a staircase. Dennis warns, this mindset is toxic. If you expect success overnight, the market will teach you humility by morning. Real trading success isn't measured in days. It's measured in decades of consistency. Why patience pays. Patience is more than waiting. It's strategic waiting. It means waiting for the right setup, waiting for your edge to play out, sitting through a drawdown without panic, letting profits run without getting greedy, holding the vision even when results are delayed. Dennis says, markets are designed to transfer money from the impatient to the patient. Traders who can wait win. The psychology of long-term thinking. Here's the hard truth. Our brains are wired for short-term rewards. Dopamine hits, instant results, fast feedback. That's why short-term trading feels so exciting. But Dennis warns, it's also why so many fail. To develop long-term thinking, you must rewire your mindset. Here's how. Zoom out. Focus on your monthly and yearly equity curve, not today's P&L. Review performance quarterly. A bad day doesn't define you. A bad year of mistakes might. Trust the process, not the result. Your system may lose 4 out of 10 trades, but still make money over time. Build patience like a muscle. Start by not checking charts compulsively. Create space between trades. Case study. Why most traders quit too soon. Dennis shares a powerful insight. Many traders abandon winning systems right before they begin to work. Why? Because they couldn't stand the waiting. Because a few losses felt like failure. Because they lacked vision. Patience isn't just passive. It's a form of strength. Those who think in decades are never shaken by a bad week. Key takeaways from Chapter 8. Long-term thinking is a competitive edge. Impatience leads to emotional trading and poor timing. True success comes from compounding, not quick hits. Let your edge play out over hundreds of trades, not 10. Patience isn't the absence of action, it's the wisdom to wait. If you've mastered long-term thinking and patience, how do you stay emotionally stable when the market throws you into chaos? You will know in the next chapter. Chapter 9. The Mindset of a Pro Trader. What separates a pro trader from the crowd? It's not money, it's not IQ, it's not even experience. It's mindset, a way of thinking that's been sharpened by discipline, shaped by loss, and focused on one thing: long-term mastery. In this final chapter, Richard Dennis unveils the traits and inner habits of professional traders, those who thrive in uncertainty, perform under pressure, and grow stronger with every trade. The core beliefs of a professional trader. Richard Dennis believes professional traders operate from a different set of mental beliefs than amateurs. Here's what they believe. 1. I am not the market. The market isn't personal. It's not out to hurt you. It just is. 2. Losses are part of the business. They don't panic when they lose. They reflect and improve. 3. Process greater than outcome. They don't measure success by one trade. They look at execution, risk control, and discipline. 4. Every trade is independent. They don't carry emotional baggage. A win doesn't make them arrogant. A loss doesn't break them. Emotional stability under pressure. Pro traders aren't fearless. They're emotionally balanced. They feel fear, but don't act on it. They feel greed, but control it. They don't let a single trade affect their identity. Richard Dennis emphasizes this. You are not your P and L. You are your process. This level of detachment doesn't come naturally. It comes from constant internal work, including journaling thoughts and emotional triggers, reviewing mistakes with honesty, practicing mindfulness or mental resets, staying grounded in purpose, not performance, habits of pro traders. Dennis shares several daily practices that keep pros ahead of the game. Pre-market mental prep. Like athletes, they warm up their mind before game time. Strict risk rules. They define maximum loss before entering any position. Post-trade reflection. They analyze decisions, not just results. Continuous learning. Books, mentors, backtesting, psychology. They never stop improving. Beyond trading. Applying this mindset to life. Here's the beautiful truth. The mindset of a professional trader isn't just for the markets. It's a mindset for life success. Want to handle pressure at work? Use risk management and emotional control. Want to grow long-term wealth? Think in decades, not days. Want to build better habits? Trust the process. Track performance. Don't quit after setbacks. In every challenge, personal, financial, emotional, you can ask yourself, what would a professional trader do here? And just like that, you'll respond with patience, clarity, and discipline. Final takeaways from the book. Mindset is everything. Strategy is secondary. You must master your emotions before you can master the market. Discipline, patience, and process are your true edge. Success is not about being right. It's about making good decisions repeatedly. Suggestions to apply this book in real life. 1. Start journaling your decisions, trades, or daily goals. Track emotions, not just outcomes. 2. Develop a personal trading system for life. Habits, rules, and processes that guide your behavior. 3. Read this book again, not as a trader, but as a learner. You'll uncover new insights each time. 4. Build a circle of accountability. Pro traders don't trade in isolation. They learn from others. And that brings us to the end of Trading Psychology by Richard Dennis, a book that doesn't just teach you how to trade, but how to think, how to endure, and how to grow. Whether you're in the markets or navigating life's challenges, the core lessons remain the same. Control your emotions, trust your system, and play the long game. If you've made it this far, you're already steps ahead of most people because you're building the mindset of a true professional. If this book helped shift your thinking or sparked something inside you, let us know in the comments below. And here's a question for you. What book should we summarize next? Drop your audiobook suggestions in the comments, and we might feature your pick in the next video on Book Loom. Until then, stay sharp, stay calm, and keep learning. Thank you.